What's up YouTube, it's Louis here. I hope you're all well. We're looking at Ethereum today on the weekly time frame. We'll start here at first and then we'll scale down to the lower time frames. I've drawn out some levels. This is just as we have on the Bitcoin chart. This is where we called for the bear market once we lost this area. So this is where it was set and then we lost it January last year, and that's where I told everyone I've gotten out of crypto half by half. I told everyone in the group chat first, and then of course on YouTube as well the next day, after of course doing it overnight, because you need to do it on the closes. This is the confirmation. So here, weekly close at about, well, back then I think it was 1 a.m. now it's midnight, but yeah, 1 a.m. on Sunday. Then this candle opens Monday, and so yeah, that was why we essentially lost. We were saying that even if we come up now, doesn't matter, it's a lower high, and we've continued down. We've respected this support as resistance, and we were trying to continue lower. So that signal in itself, after making a lower low, coming back up, forming a lower high, you should make a lower low. So that is the expectation until you take out this high. This is interesting because this area is a point of interest for me. We've got the psychological level of $2,000. But also, if I place the fibs, we can see we came up and we started heading down from here. So something needs to stop me from coming up. Of course, we can just use the psychological level, but there's more to it. Let's find more things that are acting as confluence. So from this false high over here, sorry, not false high, that's the false high. Sorry, from this lower high over here, after coming up, it looked like we reclaimed it. But again, we already put that lower low. A lower low below the lowest point is a downtrend. So after forming a lower low, we should see a lower high, and then a lower low, lower high, lower low. So until we break that high, there's still chances of going lower. It looks like right now we're almost getting above after tackling the 200 EMA. This is what's not allowing us at the moment to continue to this 55 EMA, which is something that we spoke about in the last update. We are anticipating the 0.5 fib 1776 as long as we can push through this level. We are above the 382, so a weekly close this week above the 382, as long as it's coming back down and holding its support. Technically you haven't retested it, but if we were to come back down to it, as long as the weekly candle is above, we should continue higher. So when I zoom out again, we can see the golden pocket is here. And what's interesting is that our bear market level is actually lining up with the 786. Why this is interesting is because if you've been following the channel for long enough, you would know we've explained multiple times that you can go as deep as the 786 and still continue lower. So that would be a push, exhaust, continue. But just like over here, at some point as you're coming down, the expectation is lower, but you can put in a higher low. You just need to see those signals. Once you've got this higher low, the next step for the confirmation that we're actually going to continue up is breaking that high. So what I've just explained here is the same as down here essentially. So we've set this high, you're meant to continue lower. We started forming one bottom, a second bottom in itself. There's another double bottom over here. We've come to the target. We've met the target. We're at the 200 EMA as well. This is deciding the trend on the weekly time frame, and we are under it. So we are in a downtrend. We should continue lower. But if we're given a sign where we're closing the weekly candle above the 200 weekly EMA, we're going to try and break above the 0.5 fib. Again, remember, to invalidate this lower low, we need to go ahead and take out this high, which is important because it's the golden pocket. It's not what should happen. Again, push, exhaust, continue is what should happen. However, if you put in that higher low and we break that high and we're pushing through the golden pocket and $2,000, this is something we call the reversal wave, where I must see price now holding this 2021 summer low, flipping this golden pocket into support, which is not what should happen. This is something we call the reversal wave. Of course, this tool here is used in two ways. It's called the fib retracement tool because you're meant to use it as measuring a push. It's telling you where it's retracing to before continuing on its trend. It can deviate from that by putting in a higher low and taking out that high, which is the golden pocket flipping it into support, taking out that 786 fib, and then you've got chances, real chances of breaking above that 1 fib level. So only once we are above 1,700, 2,100, we're starting this journey to 2.6, and only once we're flipping this low, this higher low that we lost over here in January last year, only once that's confirmed as support, we're going back to 3.5k. So there's no guarantees any step of the way. Basically, you could drop this, you could push through the golden pocket and it still be a fake out, you come back down. You could push all the way up to the 786 and still come all the way back down. Yes, of course, you can also form that higher low and tackle it again. This is what the bulls would want, this is what we all want. But with the risk, it actually does still continue lower. So there's always going to be that risk above us until we're completely clearing out all these previous high points. Which, remember, this is our high, lower high, lower high. And so we haven't changed the structure as of yet. The only change of structure in the very short term is, for the moment, we've put in this higher low. But you'd be doing that anyway as you'd be coming down, back down to here. However, we've come into this zone of support or of demand, and we're bouncing. Okay, so now the next step is we must take out this golden pocket. That's the next step. Thank you guys so much for, well, that was just the weekly time frame. Thank you guys for tuning in to the weekly time frame. If you're enjoying the video so far, go ahead and smash that like button. So now over to the daily time frame. Might be a bit of a longer update today. Just wanted to make it very clear, because so many people are abusing me. It's actually ridiculous in the comments and on Twitter as well. In every update, I'm giving you both scenarios. I'm giving you what the expectation is, because again, for example, here, you've put in this lower low, you've put in this lower high, so you should expect a lower low unless proven otherwise. So now we're putting in that higher low, we're coming up. Now I've given you the next. We need to take that out to confirm we're going up. It's not completely confirmed at the moment. Right now, what I'm liking is that we're above the 200 daily EMA, although in my opinion, this is really not good. The last time we saw something where it's going up in a straight line back here, look what happened, eventually came down. I'm not sure it was on the Ethereum chart. Yeah, it was as well as Bitcoin. Look at that. We eventually continued lower. It did of course put in a like ABC upwards, so push up, retrace, continuation. So that's what it's trying to do now. Push up, retrace, continuation. So that's what it's going to do to try and break this high. So yeah, guys, it's simply all about that. You can see that we're trapped beneath this over here between 1.65k and 1.67k. And that's where we're just struggling with at the moment. We'll scale down to the lower time frames, but again, I just don't like how fast we've come up without any pullbacks. We saw this in the past with Bitcoin, which led to eventual lower lows. So just keep that in mind. We'll go to the 15-minute time frame now. So yeah, we're still within that range, that silly range, but let's take it from the 1 fib level to the 0 fib. And we can see that we have created the reversal wave. We're continuously holding it as support. So the expectation now, if we can actually remain above the 786, you can see it's coming. They're coming meeting basically. We're coming into the apex of these two lines meeting. This being your support, this being your resistance. So you can see by the time they meet, we're going to get a break out downwards or upwards. Okay, simple as that. Wait. I'd say wait for a. What time frame is it? 15-minute. Wait for a 15-minute candle close above this wick over here. What is it? About 1,582. You can wait for a 15-minute candle close above that to continue up to the 1 fib level. Equally, if you lose the 786, you're going to come back down to the 200. This could push you back up. Again, you're in an uptrend. However, if the 200 EMA is lost and we flip it into resistance, it's likely we come and revisit the 0.618 fib at 1,558. That could be a dump of, it's not going to be big, so you're going to have to leverage 0.7%. Yeah, little leverage, but this is for the people who want to trade on the 15-minute today. That's why we look at all the time frames, so we're catering for everyone. So I hope you guys enjoyed today's video. Yeah, we gave both scenarios, but of course, go ahead and do your own analysis. come to your conclusions. These videos are just to show you guys my thought process. So just because in the past 4 years when I first started, I was getting caught off guard a lot. Why? Because I was just following blindly the people on the social media platforms. And I really wasn't, I was just a headless chicken at the time. So I was like, okay, these guys are big YouTubers and Twitter pages. Let me go and just copy them essentially. And then seeing that sometimes it's working, sometimes it's not working. Why? Because we were just sticking to a bias, which is not even ours. But first of all, that's wrong in the first place. Don't stick to a bias. We've got reasonings to think one way. You know, if we've got a lower low and a lower high, we're in a downtrend. If we've got a higher high and a higher low, we've got an uptrend. But if you are in an uptrend and you have higher highs and higher lows, and you somehow put in a lower high and then a lower low, then this trend changes. Equally, vice versa. If we're in a downtrend, we've got lower lows, lower highs, we're expecting that continuation, and it randomly puts in a higher low. Okay, now make the higher high, and you've just changed trend. So we've got our invalidation points. This is what we need to understand. So why not prepare for both scenarios? This is what we do on the channel. And so what you need to do, just prepare for both scenarios. You wait for which one it wants to show you, and then you trade what it shows you, not what you think it's going to do. Then you're just fighting a losing game. It's only 50-50, guys. If you're biased to one side and it goes the other way, you're just going to be like, oh, I'm an idiot. So just look at it both ways. Prepare for both ways. Then the signals that it gives, then you enter. If there's no signals, then you don't enter. It needs to be clear, so clear for you. If it's messy, don't enter. If it's clear, enter. But yeah, these videos is just to serve as the purpose is to for you guys to just see my viewpoints, how I view the market, so I don't get caught off guard because of my past experiences. Looking out for you guys and giving you explanations and invalidation points, and then you also have to just go back to your own charts and then do your own analysis and compare and contrast. Thank you guys so much. Like, subscribe and comment. We're almost at 5k, so please do share the video. Cheers.